Assalamualaikum warahmatullahi wabarakatuh. I am Izzatul binti Hadi.
Assalamualaikum and hi, my name is Aimi Syairah binti Mohd Sukri from AC2204B.
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Syazwani binti Jasni.
Assalamualaikum. My name is Nurul Balqis binti Ishak.
In this video, we are just going to explain about cash and also cash receipt transaction in sales and collection cycle. For your information, there are 5 classes of transactions in sales and collection cycle. The first one is sales, the second one is cash receipt, next one is sales returns and allowance, the fourth one is write-off of uncollectible accounts, and the last one is estimate of bad debt expense. We are going to explain the sales transaction first in sales and collection cycle. The first management accession in sales and collection cycles is occurrence. The audit objective of this management accession is to identify whether all the reported sales are actually occurred and required. There are 5 classes of transaction account in sales and collection cycle in occurrence management accession. The first one is sales account, the second one is account receivable, the third one is cash discount taken, the fourth one is sales return, and the last one is bad debt expenses. There are 2 internal controls in management accession of occurrence. The first one is each sales transaction are supported by the necessary documents such as approved sales order, shipping documents, and invoices. The second one is the invoice need to be supported by the customer purchase order. There are 2 audit procedures that the company can do. The first one is test of control and the second one is substantive control. I'm going to explain the first audit procedure, which is test of control. The first one is examine customer order for evidence of credit approval. The second one is examine sales invoice for customer order. And the last one is observe whether monthly statements are sent. In substantive control, the company needs to review sales journal and master file for unusual transaction and amounts. The second one is the company needs to trace sales journal entries for supporting documents such as customer order, sales order, and duplicate sales invoice. There are 4 audit evidence in occurrence management accession in sales and collection cycle for sales transaction. So the first one is reconciliation of bank. The second one is pre-listing of cash. The third one is reconciliation of documents. And the last one is cash receipt document. In occurrence management accession in sales transaction, there are 3 possible statements that company have done. The first one is sales included in the journals for with no shipment was made. The second one is shipment made to non-existent customer and recorded as sales. And the last one is sales recorded more than once.
Assalamualaikum warahmatullahi wabarakatuh. I am Izzatul binti Hadi. I will talk about completeness. Completeness is one of management assertion that related to the sales and collection cycle. The meaning of completeness is the situation where all sales transactions are recorded completely in respective account. The objective of this assertion is to check whether all sales are completely recorded in respective account. The account that related to this assertion are sales, account receivable, cash discount taken, sales return and allowance, and bad debt expenses. Under internal control, there is a control procedure that company do to make sure that the sales are recorded, which are shipping a prey number and accounted for weekly, and batch total of quantity shipped are compared with quality bill. For audit procedure, there are two items which are test of control and substantive test. For the test of control, there are two which are account for a sequence of shipping document and examine file of batch total for initial of data control claim. While substantive test is trace selected shipping document to the sales journal to be sure that each one is included. There are four audit evidence of completeness, which are bank reconciliation, pre-listing of cash, reconciliation of document, and cash receipt transaction. And there are three possible misstatements that may be occur if the sales are not recorded completely. The first one is overstatement or understatement of sale and account receivable. The second one is uncollectible account receivable have not been provided. And the third one is misstatement in account receivable and related income statement account.
So I will talk about accuracy assertion for sales. Accuracy in sales means that sales are correctly recorded. Audit objective for sales is recorded sales are for the amount of goods shipped and are correctly billed and recorded. There are 5 types of class of transaction and relevant account, which is sales, account receivables, cash discount taken, sales return and allowances, and bad debt expenses. There are 4 internal controls in sales, which is sales are supported by authorized shipping documents approved customer's order, batch totals of quantities shipped are compared with quantities billed, unit selling prices are obtained from the price list master file of approved prices, and the last one is statements are sent to customers each month. In audit procedure of sales, there are two types of tests, which is test of control and substantive tests. There are 4 tests of control in sales, which is examine sales invoice for supporting documents, examine file of batch totals for initials of data control clerk, examine the approved price list for accuracy and proper authorization, and the last one is observe whether monthly statements are sent. Meanwhile, for substantive tests, there are 3 substantive tests, which is trace entries in sales journals to sales invoices, recompute prices and expenses on sales invoices, and the last one is trace details on sales invoice to shipping documents, sales order, and customer order. There are 4 types of audit evidence in sales, which is bank reconciliation, pre-listing of cash, reconciliation of the document, and the last one is cash receipt transaction. Meanwhile, there are 3 possible misstatements in the sales, which is overstatement or understatement of sales and account receivables, uncollectible account receivables that have not been provided for, and the last one is overstatement or understatement of sales return and allowances and account receivables.
I will present the next session, which is classification. Classification is all the transactions have been recorded in the proper account. Audit objective is to check all sales transactions have been recorded in the proper accounts and correctly classified. For classes of transactions and relevant account, first, sales, second, account receivables, third, cash discount taken, fourth, sales return and allowance, and last one is bad debt expenses. For internal control is account classifications are internally verified. We have 2 audit procedures, which are test control and substantive test. For test control is to examine documents package for internal verifications, and for substantive test is to examine duplicate sales invoice for proper account classification. Audit evidence is bank, reconciliations, pre-listing of cash, reconciliation of the documents, and cash receipts transactions. Possible misstatement is overstatement or understatement of allowance for uncollectible accounts and bad debt expenses.
Right now, I want to explain about the cash receipt transaction in sales and collection cycle in terms of occurrence management accession. So the audit objective is to identify whether the recorded receipt for cash are actually received by the company or not. There are 5 relevant accounts in cash receipt of occurrence management accession in sales and collection cycles. The first one is cash sales. The second one is receipt of interest. The third one is collection on account from customers. The fourth one is dividend, and the last one is investment from owners. The internal control for this management accession is accountant independently reconciles bank account. Batch total of cash receipts are compared with computer summary reports. There are also 2 audit procedures. The first one is test of control, and the second one is substantive control. In the test of control, the auditor needs to observe segregation of duties. The second one is observe independent reconciliation of bank. In substantive control, they need to review cash receipt journals and master file for unusual transactions and amounts. The second one is trace cash receipt journal to the bank statement. And the last one is prepare a proof of cash receipts. There are 3 audit evidence. The first one is purchase order. The second one is receiving report, and the last one is customer invoice. The possible misstatement in this transaction is the company might not receive the cash receipt.
Completeness is the situation that all existing cash receipt has been recorded, and the audit objective of this assertion is to check whether all existing cash receipt has been recorded in the financial statement. The class of account transactions that related to this assertion are receipt of interest, dividend, investment by owner, bank book, account receivable ledger, and cash sale. For the internal control, what the management should have done to make sure that the cash receipt is recorded are pre-listing of cash receipt is prepared, check are restrictively endorsed, batch total of cash receipt are compared with computer summary report, and statements are sent to the customer is moved. For audit procedure, it was divided by 2, which are test of control and substantive test. For the test of control, it is to observe pre-listing of cash receipt, observe an endorsement of incoming checks, examine file of page total for initial of data control clerk, and observe whether monthly statements are sent to the customer. And there are 2 substantive tests for this transaction, which are obtain pre-listing of cash receipt and trace amount to the cash receipt, journal, testimonial, amount, and dates. And the second one is to compare the pre-listing with the duplicate deposit slip. There are 3 audit evidence that are related to this assertion, which are purchase order, receiving report, and customer invoice. And possible misstatement of financial position might be that the cash receipts are not recorded.
Accuracy in cash receipt means that it is occur when cash receipt is recorded at the deposited and recorded at the amounts received. Audit objective in cash receipt means that to check whether all cash receipts deposited and recorded at the amounts received. There are 2 types of class of transaction and relevant account, which is bank accounts and accounts receivable. There are 3 internal controls in cash receipt, which is accountant independently reconciles bank account, batch total of cash receipts are compared with computer summary reports, and the last one is statements are sent to customers each month. In audit procedures of cash receipt, there are two types of tests, which is test of control and substantive tests. There are three tests of control, which is observe whether accountant reconciles bank account, examine file of batch totals for initials of data control clerk, and the last one is observe whether monthly statements are sent. Meanwhile, there are two substantive tests, which is obtain pre-listing of cash receipts and trace amounts to the cash receipts journal, testing for names, amounts, and dates, and the last one is prepare proof of cash receipt. There are three audit evidence in cash receipt, which is purchase order, the second one is receiving report, and the last one is customer's invoice. Meanwhile, there are two possible misstatements in cash receipt, which is recorded the amount received from cash receipts are understated or overstated, and the last one is misstatements of amount in cash receipt in the transaction.
Next session is classification. Cash receipts transactions are properly classified and recorded in the correct amount. The objective is to check whether all transactions have been recorded in the correct accounts and correctly classified. For classes of transaction and relevant account, first, receipt of customers, second, dividend, third, rent, and fourth, investments by owners. For internal control, arrange the cash receipts transactions with correct classifications to avoid misstatement. And next, cash receipts transactions are internally verified. Audit procedure for tax control is trace cash receipts to cash receipts journal for proper classifications and review cash book for unusual items. For substantive task is to examine documents supporting cash receipts journal or pre-listing for proper account classifications. For audit evidence is purchase order, receiving reports, and customer's invoice. For possible misstatement is cash receipts are recorded in the wrong financial account statement. This is all from our group. Thank you for watching.